Man, what is poppin'? YouTube? What is happening today? Man, I've been trying to get along with all this stock market bullshit that's going on, and with the crypto and all that stuff being crashed down. And I noticed that Tesla has been doing these Q&As on Robinhood and all that other stuff. But man, I want to be talking about today starting in the stock market. Now, if you know me, I actually have started in the stock market about when I was 18. So around the time that I turned 18, I registered myself into getting into Robinhood in the stock market so that I can actually start investing early. Now, in this video, I know I made a few videos of this like before, but I want to be talking about how you actually can get started in the stock market, especially when you're maybe 18, 19, which that's pretty good age to start when you're getting into the stock market. And as always, I don't want to waste time, so let's get straight into the point. Now, with getting started in the stock market, usually you would have to be 18 or older, but if it's possible for your parent to open up an account for you, that would actually benefit you a lot. And with the stock market actually being a little bit down at the moment, you're actually in the right time to get in and actually start investing into a few stocks. Now, what I can recommend you to do is basically start studying more on what the stock market is really about, researching companies and what their vision is, such as, Tesla, Apple, big companies like that, and look at what their vision is. If it's a good vision and it seems like they're going to be strong in the future, you invest into those type of companies. Do not invest into companies that are not trusted. And also, you always want to ask yourself what type of stock market investor you want to be. Me personally, I try to do both sides, which I want to do day trading and I want to be a long-term investor. But at the same time, I try to go more towards the short term because I do want to get some money in. At the same time, I try to invest my money so it can be long term, so I can have long term wealth. So I guess one of the rules you would have to do is basically do some research and actually find out more about the stock market, learning about it and understanding it more as time goes on. And always try to look into companies, like I said before, their vision. Try to see what they're thinking of. Try to see how their company holds up. If the CEO is good, if the employees love working there. You gotta try to see the statistics of that. Because stock market is usually based on what the company is doing, and as well as management and all sorts of other stuff. If the stock market has bad management, a bad leader, everything is just going downhill, then understand that that company will not work out because it is going to be going downhill and it's not going to work at all, which means it will be a bad investment. You got to understand that you got to vision this stuff as something that you would have to put your money and trust your money being in. It's like basically a boss paying, one of the employees, like someone like you. They would have to trust you, make sure that they're confident enough that you're going to be doing the work and making their money. That's almost what you basically are. You're just sharing a fraction of the company, and you're like almost one of the bosses that owns that company. Now, don't go out there acting like you're some sort of big CEO, because you're not. But understand that these people are working for you and making your money. So if there's bad management in that place, if the employees just don't care, they're just not working and not making enough money, then understand that you're going to have bad investments with those types of companies. You're gonna have a bad ROI with that type of company. Now, personally, me, I usually go for big companies that I already have in my day-to-day life. Which, for example, right now, an Apple iPhone. I usually do have an iPhone, so that's usually what I buy whenever I do feel like getting a new phone. I have a MacBook, I have Apple TV. Those sorts of stuff. That's what you would try to invest your money into. You can also invest your money into dividends, which will pay you every month. And I did make a video before about dividends and how they work. I'll be making another one so I can explain it a little bit better because that one was a little bit outdated and I was a little bit, off because I don't know how to speak through a mic. But I'll be talking more about dividends. Just to be short about it, dividends are basically stocks that you just invest your money into, and a percentage will be given to you as a passive income or a passive return. So if you, let's say, you invest into a Target, AT&T and stuff like that, and you put, you get one share, you get paid like around maybe $1 or like, $1.10, somewhere around that range. It is pretty small, but once compound interest starts to hit, then you get more and more returns and you get more passive income coming in. Another thing you have to understand when you're starting in the stock market is understand that the stock market is kind of like a gamble. You will never actually know when you're going to get a return, and you will never actually know when the return will be actually big. Like currently, it's kind of like a crash right now. So if you do invest your money, it might take a while for it to be a big return, but understand that at the end of the day, it will be worth it. And as well as I was talking about risk, long term might not be such a risky thing, but when I'm talking about more of risking, it's going to be more about short term, such as day trading stocks. And you're probably asking yourself, what the fuck is day trading? Let's put it in perspective like this. let's say you see this stock and you're trying to make a prediction like, oh, this stock might go up to this amount on this date. So you have a money, you have maybe $1,000, right? It's called a call. So you put it on the call. You tell them, let them know, oh, this is gonna be this amount. Like for example, let's say Tesla. You predict that it's gonna be at 470. Currently, it's at 440, and you put $1,000 bet. That's basically what it kind of is, like a bet. You put it right there, $1,000. Your return, if you're correct, and it actually goes above that 470, you'll actually get a return of whatever percentage they give you. Now, let's say you got like a 25%, return. You get $1,000 plus 250, so you'll get a $250 extra on top of your $1,000 that you put in. So now you made a $250 extra dollars just from putting a bet. Now keep in mind this is pretty risky because it is kind of a gamble and you wouldn't actually be right all the time. Sometimes it can actually affect you a lot and it can really hurt your money. Long-term investing is where I like to put my money into as well. Long-term investing in stocks will basically be a lot more beneficial because you'll actually be able to have that stock growing over time. You can also put your money in constantly, which will make it grow over time. And if you do dividends, which will be a lot better because compound interest will be able to hit. And as time goes on, it will keep building your wealth. It will keep building your money up. And when you open your bank account someday, oh, you're going to have a whole lot of money in there. You can pass it on to your next generation or you can have it all to yourself. But understand that you're going to have to take some losses a little with this money type of stock market. But understand you're going to have to take some sort of risk with this long-term investing because you will have to put some money there. It's more like a savings account, except at least your money isn't going to be collecting some dust. But understand at the end of the day, it will be worth it because you will have a good amount of money towards the future. Last but not least, never, and I mean never, put your eggs all in one basket. What I mean by this is you gotta diversify with your stocks. People out here just put all their money into one stock, and that is very risky. That is very dumb. Do not do that, please. The problem with that is that people don't understand that it can be risky. They can lose all their money today just from the company, shutting down or something happening to the company. You gotta diversify and put little money in each category. It doesn't matter which category it is. Just understand that it would be way too risky if you just put all your money in one basket. Make sure you always diversify and look into every stock at once. But that'll be all for today's video, man. If you got any questions, concerns, you can always do it down in the comments below. My next video is going to be coming soon. Stay tuned for that. I also have a TikTok account where you can watch some of my videos. If you like the video, like below. If you love me at all, subscribe to the channel. Put the bell notification on. I hope I see you in the next video.